Now, I highly doubt this was the Q4 bull run you ordered. The truth is, the crypto market is hurting right now. Bitcoin's back around 108,000, Ethereum at 3,800, and now we've had 7 straight days of red across the board. It's been one of the worst Octobers for Bitcoin in nearly a decade, and investors are on the edge. But here's the twist. October still isn't over, and while retail traders are panicking and calling it over, institutions are quietly buying the dip. Corporations poured millions of dollars into Bitcoin and Ethereum right after the $20 billion crash just not long ago. They're literally calling it an institutional discount. One of the names mentioned was SharpLink Gaming, which added to its holdings while retail money fled, and a lot of others. And here's the part that no one is talking about. Institutional Ethereum holdings just hit an all-time high right after that crash. So while headlines scream fear, big money is seeing an opportunity. We just saw a huge regulatory milestone overseas. Hong Kong officially approved the first Solana ETF, marking the first altcoin ETF in all of Asia. That means now we have Bitcoin, Ethereum, and Solana ETFs trading in Hong Kong. And you can guess what happens next. Every major Asian market will be watching this. Meanwhile, in the US, the SEC isn't even reviewing new ETF applications right now because of the government shutdown, which has been going on for quite a while now. So the global gap between East and West is widening fast. Hong Kong's moving forward while US keeps pausing. Now here's what's interesting technically. Despite all the doom and gloom, open interest data is pointing towards an altcoin rebound. That means traders are slowly reaccumulating positions behind the scenes. There's also a narrative building that as gold cools off, money could rotate back into Bitcoin. Gold's been on a crazy run recently, hitting record highs and pulling ton of liquidity from risk assets. But when gold overheats, history shows that those inflows often flow back into Bitcoin. So we could be right at the start of that rotation. And here's another data point worth highlighting. Bitcoin is currently trading at a 31% discount compared to its historical correlation with the NASDAQ. That's one of the largest gaps we've seen in years. And historically, those gaps close upwards. In other words, Bitcoin is underpriced relative to traditional tech stocks and markets like Symmetry. When they're this far apart, it usually means a reversion is coming. Now the big question is the pain over? Maybe not quite yet. Altcoins are still weak, volume's thin, and sentiment is just terrible. But this setup, institutions buying during the panic, the Asia ETF approvals, gold topping out, and Bitcoin trading at deep discounts is exactly what accumulation phases look like. So yeah, this could be the calm before the reversal. For traders, I'd personally focus on two things right now. The 107K support zone for Bitcoin. That's where the area that whales are watching. The rotation narrative. If gold starts pulling back more, that's a signal for crypto risk appetite to possibly return. And for long-term holders, this is the moment to remember what cycle we're in. We're not at a blow off top, in my opinion. We're at an institutional accumulation zone. The panic is temporary. The infrastructure is permanent. And if you did find this breakdown helpful, please make sure to like and subscribe. It helps this channel reach more people who actually want the truth, not just the hype. Right now, the fear is temporary, but the opportunity is long-term. Smart money knows that, and soon retail will catch on too. So stay focused, stay patient, and I'll see you in the next one. Cheers.